If you've just joined us, you're right on time to catch us talk about financial stability, investment opportunities, and plan on the morning flight on Loveworld Expressions, where we do entertain you beyond borders. And we've been joined by private banker and investor, Solomon King. Good morning, and thank you for joining us.
Thank you. It's good to be here.
Okay. So let's break it down, really, which is what exactly is investment?
Okay. I thought you would ask what investing is, because investment would now be the noun which describes either an instrument by which you invest or an asset class, which is a group of opportunities together. Okay. But investing is what the investor does, where he commits to, now that's the word, commits to the creation and multiplication of income. So investing is a process that has a plan by which a person who is described as an investor commits to creating and multiplying income consistently.
Consistently.
Okay.
Okay, looking at the consistent, what are the basic types of investing? When you talk to one wants to go into investment, you want to go into investment, what are the basic type of investing?
All right, so it brings us to what we describe as asset classes.
Okay.
And then there are just a couple of them, major. Then you now have several instruments under each one.
Each of them.
So number one, real estate.
Okay.
Number two, entrepreneurship, or what we describe as your own business.
Okay.
Then there is the stock market. Then the last 20 to 30 years, there's this asset class that has come up and is really huge now. We call it e-business or the internet. So it's on the internet that, it's from that background that blockchain has developed. It's on that background that digital assets, or what you describe as cryptocurrency, has developed. It's on that background that e-commerce has developed. It's on that background that you now have things like fintech and all. Okay. Then in the stock market, you have several instruments, stocks, bonds, which are largely the group of investment opportunities that are in that. And then you now have different versions of them. So, and then when you talk shares and bonds and stocks, it's just about businesses that are already established.
Okay.
They have big books, they have big numbers, and people can buy into them. So putting all those kind of businesses together in a market is what you have as the stock market. So you now have shares of different companies in different industries, you know, so you have that in that class. Then you have real estate. In real estate, you have what is described as commercial real estate, and you have residential real estate. Then also real estate has the buying and the selling of landed properties, you know, so everything that is, like somebody described it one time, anything that is real is described as real estate. So usually would have investment opportunities in this area. Then in entrepreneurship, like the stock market, it's somebody doing his own business. But most times people don't realize that entrepreneurship is a form of investing. Now, the background of this is this. Every time you want to think about investing, just remember that you're committing capital into a venture or a project or a business. Investing always, when it is rightly done, is always money, capital, going into something that is being bought or sold. There has to be a business behind anything that is described as investing. Other than that, you would have fakes. And you know that in every market, there is always a fake. For every Gucci that is real, there is a fake one. And so for every investment that is real, there's a fake one. And that is the reality of the market. And most people go into the market thinking that everything is going to be good. No, you're lying to yourself, because the same way you have an original of anything, there's always a fake of it. And so it's the same way with investing. So real estate, the stock market, e-business, and then, of course, your own entrepreneurship. So every time you commit capital into a business, that you are going into by yourself, you're also investing. So you're an investor all the same.
So if you are a salary earner, for instance, I work and I earn salary.
Awesome.
What category will I fall into when I want to invest? Talking all these categories you have mentioned.
So the way by which you get income is not necessarily categorized into these asset classes. So you're an active income earner. So you have what is described as active income and passive income. Passive income is your money at work, doing the work for you.
Okay.
Active income is you. You have to show up there and get paid. Now, we say in the investment space that it's important for you to have a job. Everybody needs 2 jobs. One job for you, one job for your money. So your money has its own job. You have your own job. In fact, you are considered wealthy when you have more of your money working for you than you ever have to work. So that means that passive income far outweighs your active income. So as a salary earner, it's a great place. In fact, I tell anybody who needs to get money that the first thing you want to do is go and work. Learn how to even work. You know, because your job helps you grow. Your job helps you get better. Your job helps you develop your potentials. Your job helps you serve. And a person who will be wealthy is somebody who has mastered service. Even our Lord and Savior mentions that he who wants to be Oga Patapata must first go down first. You know, so service has a way of creating for you the structure, the habitual structure that helps you make money.
Wow. Okay, so if I earn, say, or I'm an entrepreneur and I have, say, 100,000 naira.
What would I ask you to do?
What would you ask me to do?
All right. So, you know, each of these different asset classes have different entry prices.
Okay.
What would you buy with 100,000 in real estate? Nothing.
No, but they usually have this advertisement.
Not even a plot in Kotangora.
No.
Maybe in Kotangora, but again, that brings us to another issue in real estate. Location.
Okay.
Location. If you buy a property in Kotangora, a plot of land in Kotangora, what do you want they can do? What are you going to do with it?
It's going to develop. You have these real estate guys tell you this place will develop within
Maybe she's
so
relocating to
number of
Kotangora.
years, and they say pay 50,000 naira for this. Pay 50,000 naira first installment. You have a plan.
So an instrumental payment for a property is not the full payment of the property.
No.
So, talking about real estate, because that's quite common around us now, please be careful. It's not everything that shows up that is real. We said that from the beginning.
Yeah.
Some real investor that I follow over the years, Robert Kiyosaki, says that for every 10 opportunities, only one is the great opportunity. So the ratio is a ratio. I like the look on your face. The ratio is a ratio 1 to 10. That said, you would need to look closely, very well, before you are jumping in on any opportunity. Not everything that shows up to you. It's like when you go to the market. The guys who show up to you on the road, who are jumping at you, come to my shop, may not necessarily be the guys. In fact, they are hawkers. The owner of the shop who has the real deal is probably seated somewhere. And so, it behoves on you as the investor or the person with the capital to learn. I tell people, first things first, learn. Sit down, take a course. You want to buy real estate. How many books on real estate have you read? How many courses on real estate have you taken? Before you commit capital to anything, oh, you say you don't have time, put the money in the bank a while. It wouldn't cost you more than 2-3 days to take a small course on real estate and understand what is good and what is bad in that market.
So
One day I went to buy chicken. My wife was heavily pregnant and I was trying to impress her. And it was raining. And I ran to the market, and I got there. And on the outside, there were these guys, it was about to rain. Okay, it was still drizzling. So this guy, okay, come buy chicken. And I'm like, yeah, this is chicken. I might as well just buy the thing and leave. So my brother, I took the chicken home and I opened it and it was all bones.
Wow.
And I'm like, but this was said to be chicken to me. And my wife comes out and she says, what happened? And I'm like, this is what has happened. And she laughed hysterically at me. And she said, if you had told me, I'll have told you not to buy from those guys. If you had gotten the knowledge, if you had understood, you'll have known what to buy and what not to buy. It's the same thing that happens in the investing market. And quite a lot of people fall for these things that they describe as, okay, so they say,
Opportunities.
yeah. So not everything that shows up, and it behoves on you, the first things first, it's learning.
Knowledge.
Yeah. What is lacking a lot of times is the financial intelligence that people don't have.
Okay, you've probably dovetailed into my next question, which is talking about some of the risks involved. Because when you commit your money, definitely there'll be some risks.
Oh yeah, there's what we describe as a risk return trade-off. Now it's a law of some sort, and I'm usually very careful with laws because a person makes a law does not mean that it cannot be questioned. So you have this law that says that the higher the risk, the higher the return. The lower the risk, the lower the return. So you have people say, oh, bonds have low risk. So because a bond has low risk, it has low returns.
Is it a myth?
It may not be totally true. Now, what the educated investor does is he looks at a law and looks for a way by which he can climb on top of it. Our dear man of God, Pastor Chris, explains to us about the way laws work. So gravity is supposed to be a law. But one man flew into space yesterday and came back freely. What did he do? Thermodynamics. He's changed the law. He's climbed onto a higher law. And so if there is a law concerning risk, for example, and return, the educated investor now wants to say, okay, how do I make money despite this risk? In fact, what we say to the wealthy investors is, I know there is a risk. My job as an investor is to first know what the risk is and then look for alternative measures by which to
Avoid the risk.
not necessarily avoid it,
Mitigate the risk.
Mitigate the risk, that's the word. So you may not eliminate the risk totally, but you must climb on top of it to still make profit, and that's how you win. So what risks are there in investing? Quite a lot. But I think that the major risk with most investing opportunities and investments are the human risk.
Okay.
There are 4 of them. Number 1, ignorance. Number 2, fear. Number 3, laziness. Number 4, greed.
What's number 1?
Ignorance.
Okay.
Number 2, laziness. Number 3, fear. Number 4, greed. These guys are the enemies of your money. If you're able to master your laziness, your ignorance, your fear, and your greed, you do well with money. So there are several, because now every opportunity, every investment opportunity has its own attendant risk. If you do cryptocurrency, for example, or blockchain technology, or anything in that space, there are risks like vanishing risk, which means that your money can go in and it just literally vanishes. There's risk called the market noise risk,
Okay.
which means that if you're buying an investment that is already noisy, that money is already going. So, oh, it's time to buy Bitcoin, it's time to buy Bitcoin. Bitcoin is rising, immediately you begin to hear that noise in the market. That's the end of that money. As you go in there, you're already late. So how do you deal with market noise risk? Even market noise risk has different small cadres. In real estate, for example, the major risk you'll be dealing with is liquidity. So each investment opportunity is assessed for its own risk. But most times, the major risk that is common in all the asset classes, for example, you might be a real estate investor, he might be a stock market investor, she might be an online business person, I might be an entrepreneur. We all have a risk cadre that is common to all of us. It's this human risk that I've mentioned. You have fear, you have greed, you have laziness, you have ignorance. And risk is largely what you don't know. the thing that makes your money lose and runs away and flies away like a bird is largely about your ignorance. Most risk is tied around something that you don't know.
That means the moment you know about it, you
Oh,
can-
risk is hugely mitigated when you know.
Okay.
when you have the idea about it.
Not the idea, the knowledge.
The knowledge of
Yeah,
it.
idea is at the surface of it. Committed studying gives you knowledge.
Okay, I know that during after the pandemic, we had a lot of persons in Nigeria.
I like the way you call it,
Yes.
pandemic.
In Nigeria, a lot of persons in Nigeria lost their jobs and other things, and we began to see the uprise of the bring up of different entrepreneurs.
Yeah.
People started doing sales of things, going to all other businesses
Online
like
sales.
that. Online sales. And I want to ask, for the typical person, like I said, in Nigeria, what are the things basically that you need to look at, the best investment plans that a person can go into, the best, knowing that some persons might have lost jobs and disabled. These steps, if you want to get to, you talked about knowledge, talked about other things. Some people are also thinking about how do I even raise capital.
Sorry, you smiled. Is that what we can describe as the best?
Good. So that's on the side. You seem to be meddling a lot of things together, and that's why I kind of smiled. Raising capital is different from using capital that already exists. The process by which you raise capital, the knowledge and the know-how by which you raise capital is hugely different from using the already existing capital. Now, the best investment. That's really huge because every financial advisor has a bias. We all have our strengths, we all have the places where we have interest. Investment is a question of interest. Investment is a personal issue. So you can, if you ask somebody who's an art enthusiast, what's the best investment? He will tell you, oh, I want a studio, I want an art gallery, I want to paint. So investment is very personal. So you're the one who decides what works for you. But in choosing an investment that works, I usually would say that choose something that you're interested in and something that you have knowledge about or you're willing to get knowledge about. If you talk to me right now about Forex, I won't listen to you.
So why do you need an advisor?
To help you understand the options in the market.
When you yourself will have immersed yourself.
So I had interest in chicken, but I didn't know about chicken. So my advisor, my wife, was the person who would tell me that, Omo, this is the kind of chicken that you buy.
Yes.
These are the boneless
because
chicken.
So that's the thing. So it's like saying, why do you need a teacher when you can go into the market and lose money first? If somebody has done it, if somebody is ahead of you, if somebody has gotten results in it, let him show you. It spares you a lot of time.
Okay.
So that's that. There's a lot of issues coming up simultaneously, and so it seems to be jumping in. And so I was saying that invest in something that you understand or you're willing to get knowledge about. Okay. I was saying that if you ask me now to put money in Forex, I'll be looking at you like, because not like Forex isn't productive or doesn't have, I don't like it. So if you're going to choose an investment, let it be something also that suits your personality. I'm very impatient. I can't sit down somewhere and be looking at one computer. You don't go up. I can do it. So I'd rather run a business. So if you ask me, Solomon, what's the best investment? I say, oh, start your own business. However, starting your own business is not for all of us.
Exactly. I mean, I would like to cut in there because when you say start your own business, there's something that I really would love you to, sort of explain to someone that is watching now and saying, see, I have started my own business. I think the discipline to separate between capital and your profits is something that really needs to be, we need to bring light on, because a lot of time we say we start our own business. For example, someone starts maybe a fruit business, for instance. You start with a capital of maybe 10,000 naira, or let's say 20,000 naira. And at the end of the month, you are not able to account for that 20,000 naira. Then you're looking for another money to bring in to start the business again. So what are the things that, you know, such a person, you know, can give attention to so that you're not, you know, going ahead to look for capital again and again to start a business which you have already started?
All right,
There's nothing to show for
So
it.
that brings us to issues on financial structure for business. Capital is not the only way by which a business grows. But capital is not even the only way by which you finance a business.
Okay.
It's one of the ways. But I usually would say that the best way to finance a business is from sales.
What?
Okay.
It's from sales.
Sales.
Your revenues should be the people who are driving the business. Every time you are needing capital, it's expensive. Capital always has a cost. There's always something that you pay to get money funding your business. So it's best to have your business processes working well and sales going on well to get capital. That said, don't bother to go into a business if you don't have an understanding of accounting. Accounting is the language of business. The language of money is accounting. And so if you're going to be an investor, whether as someone who's invested in another person's business or as an investor in your own business, please understand the language of money. It's like a course. You know, so this is that day where there are several courses on almost everything.
Yeah, true.
So just go online.
Short courses.
Yeah, and understand the basics of capital, of profit, of sales revenue. Understand this small, simple. Take a simple course. And that way you're able to delineate what kind of, because money has different names and different shades and different functions. Oh yes, it's 100,000. But in a business, it has different uses, different names.
Yeah.
And so you need to understand what money you have per time. That's why your profit is different from your sales revenue. And that's different from capital. And that's different from your receivable. You see all these things? They're all names of money. And they all have different functions in a business. So you need to learn again. We're back there again. The challenge with that person is there's no financial education. And then even if there's financial education, now that brings us to another thing, discipline.
Yeah.
That brings us to that risk element I mentioned, laziness. So this person that you're describing needs to take lessons in accounting and money management. So that way you're able to differentiate between your personal finances and your business finances. Get an accountant if necessary. Why do you need an advisor? Sometimes an advisor is somebody who insists that you do the right thing with your money. Most people can't take the right financial decisions on their own, except somebody's breathing down their necks. So get a partner, what we describe as an accountability partner.
Okay.
You put up a savings structure and you say, I'm going to save 20,000, 30,000, or 50,000, or 100,000 every month. And then just this month, the first month is, Solomon, I'll save next month. You need somebody who insists that you do it. And it's usually great if the person is your spouse.
Okay.
So in every home, you have somebody who is the spender and the saver. Know who is who in the home. And then God help you in your house if both of you are both spenders. Then,
Both of you are savers in God.
if both of you are savers, which is something I've also experienced with quite a few families, it's also very tough. You don't live the real life. So there's some people who have lots of money saved up, stacked up, that are doing nothing with those monies there in the bank. They just like to be looking at their savings and worshiping the money.
Okay. It's been any last question for him?
No, I think he's talked about everything.
I wanted to elaborate. I think I didn't quite hit my notes on the investments that are there. So I'm saying that look for what works for you.
Okay.
If it's real estate, if you have interest in real estate. In fact, the accomplished investor has money in every asset class.
Oh, okay.
It's called diversification.
Yeah.
So your money must be working for you in every asset class. So yes, if you're interested in real estate and you've got, say, 10, 20, 50, 100 million, there's going to be, like I'm invested in real estate. I'm invested in the stock market. I have blockchain concerns. It's what you do as an investor. Your money is working for you in every class. So, is there a best investment? Not necessarily. It depends on the amount of capital that you commit. However, yeah, real estate pays good, okay, but real estate pays good, could be slow. Stock market or stock investments pays marginally, but they're very fast. So today you could put money in there, and in 2-3 weeks, if you're a trader, in 2-3 weeks, you see the money go 20-30%, you come out, you go in. We also do that in digital assets. So you usually would have different investment opportunities, but how successful you are in any market is hugely dependent on what you have up here. That's why it seems as though you go to the market with maybe like a grandmother. What you would have paid 10,000 naira for. The woman just goes there and says, no, this thing is 300 naira. And the guy agrees. And then you're wondering, how did she get such a deal? In investing, the money is made when you buy, not when you sell.
Oh. So elaborate on committing money into real estate.
Real estate is expensive. There are different players in the real estate market. So you have who we call developers, we have realtors, we have flippers. And each of these players have varying interests. A developer is somebody who buys a huge piece of property, breaks it into bits and pieces, builds on it, and begins to sell. Works. A realtor is just a...
Sorry, 1 minute. A gentleman is joining us from Bielsa.
Awesome.
Good morning.
Good morning. Good morning. Wow, so much to learn. Thank you so much, Dr. King,
I know that voice.
for enlightening us on investment, business, capital, and risk. I've learned so much. I just want to appreciate the producer of the show and everyone who said this morning.
Thank you, sir.
Mombasa and all his co-hosts. Thank you so much.
Thank you.
I really appreciate it. And I'm looking forward to another episode of this, if we can bring Solomon King back to teach us further on
If you can gladly sponsor it.
financial education.
Interesting.
Thank you so much.
Thank you.
It's all right then. Thank you.
Thank
Right.
you.
So you were talking about committing funds into real estate, developer.
Yeah, so I said the developer is somebody who buys a large piece of property, breaks it into pieces, and sells. The flipper, I like flippers a lot. We just come, we buy something that is run down. Did you hear me say we?
Yes.
Yeah. So we buy something that is run down or being distressed sold. So a property.
Yes.
Distressful.
Yeah. So again, I know that in the market there are those deals. So when I come, I look for them. I don't listen to the guy who says to me, "Sir, buy Bejuleki." Yeah, buy Bejuleki. It will say, "You're not the person. You're not the reason why I came to the market. You're like the guy who's selling torn jeans on the road. Calm down. It's brocade I want to buy, so I'm going into the market." So your depth in any market is dependent on what you have and what you came for. We all come to the market for different things. Now, if you don't know the reason why you came into the market, anything will be sold to you and you'll be comfortable.
Yeah.
So the flipper is somebody who buys and sells, basically. He buys land and sells it, makes a profit. And then in each market, there are different strategies. So there is the buy and hold. Head of a certain elderly man at the Bowale. So you see at the Bowale house everywhere. Man never sold his properties, but several properties. When he died, he had about hundreds of them. His family didn't sell the properties, didn't disperse them. They just created an holding company that services those properties and they share profit on a regular. That's real estate investing too. So it's not always about buying and selling. Sometimes it's buying and holding. So the difference in this thing I just described now is strategy. What works for you? It's also your financial objective. Eventually, for the investor, it's your objectives, it's your personality that determines what game you play in the market. Now, if I'm worth 100 million, and you're worth 10 million, the games that we will play in the market will be different.
Yeah.
the asset classes we would choose would also be different. True. I have 100 million, so I can play more games in the real estate market. You have 10 million. Yeah, 10 million is great by your standards, but there's very little that you can do. But you want to be king, I'll tell you, go to the stock market. So depending on what amount of money you have, what time you have, his grays are very plenty. I don't have any at all, which means he's closer to Jesus than I am. So which means that I'm not quite correct now, I may have more time horizon than he does. Now, time in the market is also very important. So we tell people to start investing early, because the longer the time that you wisely invest, the more money you're likely to make.
Thank you so much.
Thank you.
Right, it's been very educative. Thank you so much. Just like the other gentleman did say, hopefully in the next 1 or 2 weeks, I'm sure we'll be glad to have you back again.
I will try to see how that will work.
No, wala.
Even if I can make it here physically, I'm sure I can call in and then we can keep the conversations going. Thank
So
you.
what's the hashtag for today?
That's we could call it Business Tuesday. Okay, Money Tuesday.
Money Tuesday.
Hashtag Ego Bribu.
We said it now.
Hashtag Money Tuesday.
We say that.
Well, that's our show this morning, July 13th, 2021. My name is Shegun Adebo Wale. We'll see you tomorrow.
Bye.
Bless you. Bye.
Okay, was that your grandfather?